Hey, I'm just wanting to continue on. I'm not really sure if what Dave wanted for that. I don't know what he called it. The very the 35,000, the elevator pitch. He said the elevator pitch or the 35,000 foot view or whatever. If that helped or not. For me, I would rather just have the parts, understand each part thoroughly, and then at the end you can put it together. But anyway, I just wanted to move on because this is kind of the next step, and it's kind of a different way of looking at the same thing, and I think it's kind of it's gonna make it it's gonna be a really good building block to be able to understand it. So I was just gonna do it like this. So check out these four stocks, for example. I think it'll help you understand what I'm doing. So I help you understand what's called the risk profile. This this is a risk profile. So whereas on a stock chart, like we talked about yesterday, these are the prices, and these are the dates. So you can say, oh, here it was 3,365, you know, now, and back on Thursday it was 3,370, and back on Wednesday it was 3,330, and you can look back in time and see what the prices were. And I know you understand that because we went over it, and you probably understood it before. But the risk profile is different, and you don't know what it was in the past. You just know what it is now. That's all you know. Like, you put this thing on the date that you want, and it can be tomorrow. Tomorrow is an estimate, but it could be basically, this is showing what the price is right at the moment. That's all it's doing. And this pink line is today. So you're in no position, so you have made no money, you've lost no money, and you just put your positions down here. And so for example, let's say we were going to do Apple, and let's just be like pretend we're just like these incredible geniuses that we can see the future. Just for this, I think it'll make it simple. So let's look at Apple for a second. Go to the chart. I already have it in there, Apple. So, well, here, I'm going to type it. So let's say I was in SPY and you want to go to Apple. So you just go in here, type AAPL. There's Apple, comes up. There's Apple. So let's just say we were these incredible geniuses and you bought Apple at 240. And you sold it at 460 because because you have a crystal ball. So you bought it. So let's say you bought 100 shares at 240 and you sold it at 460. So up here, let's say you bought 100. Let's call this shares, right? You bought 100 shares at 240, right? And then and you sold or exited the trade so you bought 100 shares of Apple at 240 and you exited, and you sold or exited the trade at 460, right? So all you're doing is you're saying if it was one share, it would be, because you would be $460 is what you got for it, minus 240, so you got $220. But you did 100 shares, so it's $220 times 100 shares. So you made $22,000. I mean, I know it's a lot of money. So it's just an example. So let's go and do that. So I go here and I say, I just want to show you how this works in this risk profile that I'm talking about. So we're at Apple. Let's say we were gonna. This is how you put something on the risk profile in simulation. So here's Apple right here. Here's the price right now, it's 460. So I'm going to right click on it and just say analyze, because just analyze you're buying it. Okay. So we're going to say that I got it at what did I say, 240, and then I'm going to go back up here and do it again and say analyze sell trade, and I want to take this off, and then I say I sold it at, well, it's right, it is 460 right now, but I'll put it exactly 460. So you can see, I'm just going to delete these to not make it confusing. You can see that if both of these are checked, this should say $22,000. Oh, so see, it says $220 because I just did one. So now I'm going to make this 100, make this 100. See, it's $22,000, right? So, I mean, I didn't check this before. This is how it works, right? So this is a way that you can just see what would have happened or whatever. So imagine that you bought, instead of doing this, you bought only 2 shares of Apple, but you bought it back when it was $10. Okay, if that were to happen, and right now, and it's still open, you didn't get out. So you click on that, so look, you'd be up $900. If you bought 2 shares of Apple back at $10, it would be up $900.72. And the reason it would be, you'd be in profit like that, is because you would take the price that it is now, $460.36, and minus $10, which would be $450.36. That's, you'd be in profit by that much. You'd be in $450.36 profit for 1 share of Apple. Since there's 2 shares, $450.36 this is double that. So this was 1 share, right? If this, see how this number is only $10. The price of it's now, the profit's only $10 less than the price it is now because you bought it for $10 in this example. So if you said, well, and that's showing you this line here saying, well, if the price right now it's $460.27, so if you had 1 share of Apple that you bought at $10 like a long time ago, and the price of Apple right now is $460.27, and now if it goes up to, you see, if it goes up to $470, your profit's going to be $460. If it goes up to $480, your profit's going to be $470, and so on and so on. You can see this is just showing you what this pink line is showing you, what your profit or loss would be on this for each price along the way. So of course I'm making it really simple by saying you bought 1 at $10. So if we were to go like this and go back and look at, so look, it's saying, so you would get to, so the price fell all the way down. See how you're only $100 in profit, all the way down to $10. That line is going to be $10 because you bought it at $10. So that little red line is where you start to lose money. So that's why it's at $10, because you bought it at $10. So to make it more simple, or maybe make it more clear, let's say you bought 1 share of Apple for $100. Okay, so now so it falls and you're in profit. Anything over $100, you're in profit. Anything below $100, you're in loss. I think this is probably pretty easy to understand, right? And you can stack your trades on here. So let's say that you said, oh, okay, you know what? I bought 1 share of Apple at 100, and then it moved up, and I got nervous, so I sold that 1 share at 150. So now you have $50. And you say, then some time went by. I said, shit, I better get back in. So you bought another share of Apple at 200. but you sold that, but then went up to 300, so you sold that for 300. So for example, you said I bought one at 100 and I got out at 150, so I made $50. And then said later you bought one at 200 and you sold it for 300, so you made $100. So you made 50 on the first trade and and 100 on the second trade. So altogether, you made $150, right? And because and you weren't in this stock from the time it went from 150 to 200, you weren't in the stock. So this is a way that you can sort of put all your trades on one thing and show what the profit or losses that you would have made. I'm not. It's actually very straightforward with this because like I said, you get in you're one share at 100 and you see, okay, well, anything above 100 I'm making money, anything below 100 I'm losing money. But the reason that I'm showing you this now is because with options this gets a lot more complicated, and you don't have to know everything, but just you kind of need to know what you're looking at. So this is just a stock. So I was going to go ahead and go through all these other ones, but maybe I shouldn't. But maybe I'll just do Netflix in addition, because so if I go to Netflix, NFLX, oops, sorry. And I said, okay, let's look at Netflix in the chart first. Okay, here's Netflix. Okay, let's do a similar thing. Let's pretend we're geniuses again. We're gonna buy it at 320 and sell it at 540. 320 and 540. So 320 and 540. So I don't forget. Okay, so you bought 100 at and you sold it at 540, right? So it's the same logic here, right? Oh, that's funny. I didn't mean to do that. Really? That's weird. Okay, let me. I don't want to. Let's say you sold it at 500. Right. Okay, so you bought it at 320, you sold it at 500, so you made $180 or 18,000, right? So the reason I want to show you that, let's just make that really fast. So you bought it at 320, sold it at 500. So there's just one more concept that I want you guys to get. So I'm in Netflix now. I'm going to say that I bought, and that's what I bought it at 300. Okay, I bought it at 300 and I sold it. I'm so sorry. I said I bought it at 320. I bought it at 320 and I sold it at 500. So I made $180. And the same idea, right? If I did this with 100, it would be 18,000 instead of 180. But the thing I wanted to show you was that, so let's say I did that. I did 180, and let's say instead, like I said, I got in at 320, I got out at 370, so I made $50. Then later I got in at 400, and I got out at 475. Okay, so in this example, you got in 320, got out at 370 with one share, you made $50. You got in here at 400 and you got out at 475 and you made $75. So together, it's 125, right? Right. Okay. So now if you go here and you do like this, you see you have both Apple and Netflix. So you can say, oh well, I made I made 100, and I got in 100, and I got out for my $50. I got in here at 200 and got out at 300 for $100. So together, that's $150. So you $150 here. And this is you got in at 320, got out at 370 for 50, got in at 400, got out at 475 for 75. So here it's 125. So this is 125 and this is 150. So together, obviously, it's going to be, you hit all 275, right? And now you're, and this show, all these lines are, this shows, these are all zeros because you're not in any positions. And so the way you can always tell if you're in a position or not is, first of all, the line won't be flat like this. It'll be slanted in some way. But also, and this is beyond what we should talk about today, but if the delta always has to have some value in it, positive or negative value, and then you're in a position. The rest are complicated, but the delta just means movement. So like look, if I click on 1, now you get a delta. That's your delta, right? It's like there's a delta. So if there's any value in the delta, that means you have an open position. But I mean, that's just a shorthand, a rule of thumb, so you can check really fast. But I'm just trying to make it clear what this thing does. That it's showing you can stack up your profits and see, you can put all the trades that you took or lost in here. We're not dealing with options trades yet. We're just dealing with the concept of having trades on here. And so you understand, like, you can kind of look at the history of what you did. And you don't have to show both at the same time. You normally, well, often you don't. You just say, oh, okay, I'm looking at Netflix, and now I want to look at, I always can't remember Apple, AAPL. You want to look at your Apple one or whatever. But if you want to see them, all of them that you got, you can do it like that. So that's all I wanted to say. I wanted to know if that's clear. I'm sure this is going to be a little bit complicated or a little bit, and I just want to go over it several times until you guys feel comfortable, and just push me, bug me, like, it's fine. It just takes a couple more weeks to get it. That's fine. I just want you to understand this, and then and I'm gonna send you a screenshot later of how my trade is doing. I can't show you now until the market opens because the prices are wrong. Prices haven't updated, so it won't make any sense. But after 9:30, I can do it. Okay.